Hello and welcome to this edition of Capital Markets this weekend. I'm Temple Ashaju. Thank you so much for giving us a part of your weekend with the program. This week, the International Monetary Fund, IMF, released its October 2017 World Economic Outlook as part of events marking the annual meetings of the World Bank Group. Now, the report expectedly reinforced optimism on global growth acceleration against the backdrop of supportive financial conditions, cyclical upswing of growth in advanced economies, as well as resilient performance in emerging markets. Now, global growth forecasts for 2017 and 2018 were raised by 10 basis points to 3.6% and 3.7% respectively, with the upward revision to forecast driven by higher projections for growth in the euro area and emerging economies such as China, Russia, and Brazil. The fund also raised advanced economies 2017 and 2018 growth forecast by 20 basis points and 10 basis points to 2.2% and 2.0% respectively, both higher than the 1.7% recorded in 2016. Now, despite higher projections for China, Russia, and Brazil, emerging and developing economies growth forecast in 2017 was retained at 4.6%, although better than actual growth of 4.3% in 2016. That's due to the downward revision to India and Sub-Saharan Africa growth forecasts. And in the Africa region, Nigeria, South Africa, and Angola slowly recover from economic recessions triggered by commodity price downturn and political uncertainty. Outlook for South Africa remains subdued as the fund cuts its 2017 growth projection for the economy by 30 basis points to 0.7%, with the political uncertainty which continues to weigh on consumer and investment confidence. Nigeria's 2017 and 2018 growth forecasts were retained at 0.8% and 1.7% respectively, as the IMF highlighted segmentation in the foreign exchange market and banking system facilities as factors constraining output expansion. Domestic analysts are, however, more optimistic, with 1.2% and 2.3% growth forecasts in 2017 and 2018 respectively. We are now being joined by the head of research at GTI Capital, Chukwuma, Anyanwu, who is currently in the U.S. Chukwuma, thanks a great deal for joining us on the program this evening.
Thanks for having me. It's great to be here.
Right, I appreciate you giving us a portion of your holiday, actually. Well, you are in the U.S. where the meeting is taking place, but you weren't part of the meeting, that I know. However, how did you guys, analysts in the research community, receive these projections?
Well, the thing is, it's given what's going on with Brexit, given what's going on with the U.S., political climate in the U.S., with the issues with Trump and the North Korean president, and all of the uncertainties. I think to a very large extent, the projections are a fair reflection of the current things happening in the global space.
Yeah. So what sort of effect are you expecting these projections to have on the Nigerian local market, given the 1.7% that Nigeria is now expected to grow at, with the respective years?
Well, Temple, the truth is, Nigerian economy has actually, I think the resurgence that we've seen in the market in the last couple of days, years, months, has largely been on the account of the fact that we're able to get our FX strategy right. And that, to a very large extent, that was slightly devoid of what was going on in the international community. And so the fact that we got our FX policy right made it clear that Nigeria as an investment story was the place to be. And at the time when we saw that resurgence in the market, we saw some form of uncertainty in the Eurozone. With the Brexit thing coming into the Brexit effect coming into play, may triggering the Brexit process, and at the same time we had issues with Donald Trump in the US, even though we've had positive job numbers in the US for some time now. So a lot of the things that we've had in the Nigerian market has largely been on the merits of what the opportunities Nigeria has been able to sell to the global space, and not largely what's happening with the Eurozone and the US. So now I think with that, what we would see now is some positive bounce or sustainability in our growth in the rally in our market. I think we'll see more foreign investor interest coming in Nigeria. But the mere fact that we've had a strong growth in our market in the last couple of months means that Nigeria is an attractive investment story for investors from across the world. So we'll see more of that coming in, and with a strong Q3 number sustaining that momentum, we will also see that full year numbers, a lot of investors will come in on the merits of what full year dividend declarations will be. So yes, I think for me, it's positive for our market. It will ride on the very bullish sentiment that we've experienced in the last couple of months.
But Chukwuma, you're aware that the Ms. Lagarde is actually skeptical about these projections as well, because she said there are still some threats to global economic recovery.
Yes, I'm aware of that. And the truth is, a lot of the things that she's pointed out, the skepticism with the Eurozone, with the globalization strategy, a lot of people not being very optimistic with globalization, with what happened with Brexit. For me, I think the Eurozone has handled Brexit to a very large extent quite well. I think the movement away from the Eurozone of the UK is proving more to be a clog for the UK economy rather than it is for the Eurozone, which was to a very large extent not what was expected. A lot of people expected that we'd see some major disintegration in the Eurozone, but the Eurozone seems to be holding its own. And I think that sentiment of the fact what Lagarde was pointing out was the fact that yes, if in the future we begin to see more countries trying to exit the Eurozone, we've also seen recently what happened with Catalonia and Spain. And that to a very large extent has been pretty stable. So for me, I think the Eurozone is handling the issue of the skepticism with globalization pretty decently. And I think that is credit to them, and I think that will boost or that will give credence to the optimism that IMF and even the World Bank has retained as far as recovery is concerned. So for me, it's just something that needs to give investors an air of caution or give them like some skepticism. But for me, I think there is more optimism in how the Eurozone has been able to handle the skepticism around globalization than it is a problem. For me, I think it's actually something that would is credit to the Eurozone, and I think just because Lagarde pointed out that it's something that we should be worried about doesn't necessarily mean it will crystallize and to be a threat.
All right, thank you so very much. Thank you very much for your attention, Chukwuma. I really appreciate you sparing us time on Capital Market this evening and on your part over there. Thank you so much. We look forward to seeing you back in Nigeria sometime soon.